at 500K. I know you can't find a house 500K in LA anywhere, but let's say you manage somehow. And it has appreciated over the years, and now it's like $1 million. And I can afford a larger house now, so I moved out to a larger house. Now, what should I do? Like the first question I have is, should I sell it or should I rent it out? Right? So let's consider the first possibility, which is, what if I sell the house? What would be the tax implications? Am I going to have to pay a lot of tax, whatever, all these capital gains that I've accumulated over the years? What will happen?
Okay, so let's assume that you've had that house for over a year. And so your capital gains tax could potentially be the 15 normally to up to 20% on that home gain. So the holding period is important. The other thing that you can consider is the 121 exclusion, which it basically is known as a home gain exclusion. So basically for a single person, you can exclude $250,000 of that gain from your taxable income. Now, if you're married, filing joint, it's $500,000 that you get to exclude. So it also depends on, do you guys qualify? So to qualify, it's like the ownership test and the usage test. And only one of you, if husband and wife, has to qualify for being the owners of the property. But both of you should be using the property as your primary residence for at least 2 years out of the 5 years since you sold the property. So that's something that a lot of people can take advantage of nowadays. Now, the tax difference, if there's like a gain in addition to what you were able to exclude, then you would factor in the capital gains tax.
Okay, so you're saying I should be living there for 2 years in the last 5 years.
Correct.
Right?
Yeah.
So that means if let's say I'm living there continuously for like last 5-6 years, then as soon as I move out, I have 3 years to sell it in order to actually take a benefit of this exclusion, correct?
Right. So, but those, yeah, as long as those 2 years, it was your primary residence for those 2 years at least. Correct.
Okay, primary residence. And you said both spouses must be living there, right?
No, so yes, I'm sorry. Yeah, both spouses must have lived there for the 2 years at least.
Okay.
And they don't have to be consecutive years. It could be on and off as long as it's 2 years total.
As long as it's 2 years, okay.
Right.
Yeah, this is very useful, because then what that means is that selling becomes a very viable option, because then I can avoid capital gains tax on all this $500,000 of gain or whatever the gain that's computed. That's amazing.